Hey people, what's going on? Welcome back to the channel. Hope you're well and in good health. Okay, right now we're taking a look at a Financial Times article about Jeremy Hunt, which is about to reveal a $9 billion a year permanent tax break for business. So the Chancellor's budget is due to go out shortly, so let's take a look at what's going on. So it says here, Jeremy Hunt, the UK Chancellor, will put a $9 billion permanent tax break for businesses at the heart of his autumn statement as a UK Chancellor attempts to jog British sluggish economy back to life. Facing forecasts that Britain's economy will flatline in 2024, an expected election year, Hunt will announce cuts to national insurance, more than 100 supply-side reforms, and measures to get the sick back to work. Now, Hunt's flagship reform to boost Britain's growth rate will be permanent extension of full expensing, government insiders told the Financial Times. The scheme, which was due to expire in 2026, allows the company to immediately deduct all of its spending on IT equipment, plant or machinery from taxable profits. Extending it was a crucial demand of business groups. Now, officials claim Hunt's permanent extension would give the UK one of the world's most generous capital allowance regimes. One said the move would be basically the biggest business tax cut in modern British history. The Independent Office for Budget Responsibility early this year in March said the temporary version of the $9 billion a year full expensing policy would boost business investment by as much as 3% a year during its initial 3-year period. An expected boom in tax receipts, caused in part by the government's policy of freezing tax thresholds at a time of high inflation and rising wages, should help to give Hunt more fiscal headroom for tax cuts, as much as $25 billion, according to some economists. Government insiders said they expected Hunt to announce cuts to national insurance, which is a tax on earnings from employment, to incentivize work and to prove the Conservatives are serious about cutting personal taxes. Now, PM Rishi Sunak has also said he wants to cut the 20p basic rate of income tax. Hunt could indicate that he expects the cut to go ahead before the next election, one Downing Street insider said. Now, the Resolution Foundation estimates that a 1p cut to national insurance contributions paid by employees and the self-employed would benefit 28 million people and cost the exchequer $5 billion a year. Such a cut would take the national insurance rate down from 12% to 11% and 9% to 8% respectively. A 1p cut in the basic rate of income tax would cost $7 billion a year, according to the foundation. Neither approach would on its own offset the $10 billion increase in personal taxes the think tank has estimated will result from tax thresholds being frozen next year rather than rising in line with inflation. The Conservatives will reject big government, high spending, high tax, because we know that leads to less growth, not more, Hunt will say on Wednesday. Our plan for the British economy is working, but Hunt will on Wednesday be presented with official forecasts that are expected to show a sharp downgrade to growth projections for 2024. Obviously, we're looking at a potentially sluggish economy in terms of growth next year, and that's likely basically for the next UK general election. The OBI in March forecast 1.8% growth for 2024. Economists expect a downgrade to closer to the Bank of England's forecast, which point to zero growth in 2024. Now, Andrew Bailey, Bank of England governor, struck a gloomy note on the eve of the autumn statement as he warned that despite slowing growth, financial markets were underestimating the persistence of UK inflation, which currently stands at 4.6% in October. Interest rates will have to stay high for an extended period, he warned on Tuesday, pushing back against investors who are basically saying that Bank of England will make its first interest rate cut from 5.25% in June next year as part of 2 or 3 reductions next year. We are concerned about the potential persistence of inflation as we go through the remainder of the journey down to 2%. The Bank of England inflation target, Bailey told the House of Commons Treasury Committee. Now, Hunt and Sunak are under pressure from Tory MPs to deliver a new upbeat economic strategy and reverse the party's dismal opinion poll ratings. The Chancellor will announce supply-side reforms including streamlined planning rules, support for fast-growing industries, pension reforms, and the simplification of individual savings accounts to boost saving. Economists believe Hunt's headroom against his main fiscal rule, cutting debt as a share of national income in the 50-year forecast, could rise from 6.5 billion in March to at least 25 billion. On Tuesday, Hunt announced an increase in the national living wage from £10.42 an hour to £11.44 an hour. Ministers also expect him to increase the working age benefits in line with September's inflation figures of 6.7%, the norm, rather than using the following month, October's lower figure. Okay, people, please do like, share, subscribe, comment below. Let us know what you think about this budget potential here, especially if you're in a business or you're interested in that kind of sphere, and let us know what you think about the potential, 9 billion cuts to these taxes for businesses. Okay, people, please do like, share, subscribe. Please consider supporting the channel by joining the channel. Support us on Patreon. Link in description. Catch you on the next one.